Hey everyone, welcome back to Boni's Life. I'm your host Boni, and today we're diving deep into what has been an absolutely fascinating week in the cryptocurrency markets. If you've been following crypto lately, you know things have been, well, let's just say interesting. We've got institutional money pouring in like there's no tomorrow, retail traders crying into their coffee, and enough regulatory drama to make a soap opera jealous. So grab your favorite beverage, hit that subscribe button if you haven't already, and let's break down what's really happening in crypto land. Trust me, by the end of this episode, you'll have a crystal clear picture of where Bitcoin and the broader crypto market might be heading in the next 7 days. And yes, I'll give you some actual trading strategies that you can use, not just the usual hodl and pray advice. Now, before we jump in, let me just say this has been one of those weeks where the data tells a completely different story than what you're seeing on crypto Twitter. While everyone's arguing about whether Bitcoin is going to the moon or crashing to zero, the smart money has been quietly accumulating. And when I say quietly, I mean they've been buying $2.4 billion worth of Bitcoin ETFs in just 8 consecutive days. That's not exactly pocket change, folks. Let's start with the big picture here. Bitcoin closed this analysis period at $106,050, which might not sound super exciting if you're used to those crazy 20% daily moves we sometimes see. But here's the thing that most people are missing. This sideways action around 104,500 to 106,000 is actually incredibly bullish when you look at what's happening underneath the surface. Think about it this way. Imagine you're at a party, and while everyone's arguing loudly in the living room about whether the party is good or bad, there's a line of VIPs quietly entering through the back door. That's essentially what's happening in crypto right now. The retail crowd is bearish. Social media sentiment is terrible, but institutional investors are backing up the truck. The total crypto market cap hit $3.15 trillion this week, which is down about 5% from the previous week. Now, before you start panicking, this decline is mostly coming from profit taking in altcoins, not from any fundamental weakness in the major cryptocurrencies. It's like when your portfolio dips because you sold some of your smaller positions to buy more of your favorite stock. The overall value might be down temporarily, but your conviction in the main holdings is stronger than ever. And speaking of conviction, let's talk about Ethereum for a second because the numbers here are absolutely mind-blowing. Ethereum has been adding nearly 1 million new addresses every week since May. That's a 33% increase compared to the same period last year. To put that in perspective, that's like a city the size of San Francisco deciding to join the Ethereum network every single week. The 7-day average of daily transactions is sitting at about 1.38 million, which are levels we haven't seen since early May. Now, here's where it gets really interesting, and this is something that most crypto YouTubers won't tell you because they're too busy making thumbnail faces and screaming about price predictions. The institutional adoption story this week has been absolutely unprecedented. We're talking about 8 consecutive days of positive Bitcoin ETF inflows totaling $2.4 billion. Let me repeat that, $2.4 billion in 8 days. BlackRock's iByte and Fidelity are leading this charge, and Wednesday alone saw $389.57 million in inflows. This is the longest streak since these ETFs launched, and it's happening while Bitcoin's price is basically moving sideways. What does this tell us? It tells us that institutional investors see these current levels as a bargain, not as resistance. You know what's funny? In previous market cycles, institutional interest would wane whenever Bitcoin went sideways, for more than a few days, these big money managers would get impatient and move on to other assets. But now, they're treating every sideways day as a buying opportunity. It's like they finally figured out what us long-term crypto believers have known for years. Patience in this market gets rewarded. And then we have Michael Saylor, the absolute madman himself, continuing his Bitcoin accumulation strategy. MicroStrategy now holds 592,100 Bitcoin after their recent $1 billion purchase. Every time Saylor posts his Saylor Bitcoin tracker, it's usually a signal that more corporate purchases are coming. The guy has turned corporate treasury management into an art form, and other companies are taking notes. But here's what's really wild. Saylor isn't just buying Bitcoin for his company anymore. He's out there having high-level discussions with Pakistani officials about Bitcoin policy and digital asset strategy. We're talking about national-level Bitcoin adoption strategies moving from theoretical concepts to actual implementation frameworks. When a corporate CEO is advising governments on Bitcoin policy, we've entered a completely new phase of adoption. Now let's talk about the regulatory elephant in the room, because this week brought us some absolutely massive news that most people are completely underestimating. The Genius Bill, that's the Guiding and Establishing National Innovation for U.S. Stablecoins Bill, passed the Senate with a decisive 68-30 vote. This isn't just another piece of crypto-friendly legislation. This is potentially the first actual cryptocurrency law in the United States. President Trump has been urging House Republicans to advance this lightning fast. And when you have bipartisan support in the Senate and presidential backing, you know something big is happening. This bill establishes a comprehensive framework for stablecoin issuance and operation, which is exactly the kind of regulatory clarity that major corporations have been waiting for. And speaking of major corporations, we're talking about Apple, Amazon, JP Morgan, and Morgan Stanley, all actively exploring stablecoin integration. These aren't crypto companies trying to make a quick buck. These are some of the largest, most conservative corporations in the world positioning themselves for a post-Genius regulatory environment. The stablecoin market has now surpassed $250 billion for the first time, representing 7.24% of the total crypto market cap. We're looking at the 21st consecutive month of market cap increase. USDT still dominates with 62.2% market share, but Circle's USDC at 24.2% is positioned to be the primary beneficiary of this regulatory framework. Circle's recent IPO and the subsequent 500% rally following the Senate vote shows just how much confidence the market has in this regulatory clarity. Here's something that should get Ethereum holders excited. Ethereum hosts $126 billion in stablecoin market capitalization with 50.2% blockchain dominance. Every time someone uses a stablecoin, there's a good chance they're using Ethereum's network, which creates a direct correlation between stablecoin adoption and Ethereum network utilization. But it's not just federal legislation. We're seeing Arizona just advanced Bitcoin reserve legislation through its final Senate vote. We're seeing states compete for crypto-related business and investment, creating a competitive dynamic where progressive jurisdictions attract blockchain companies and crypto businesses. It's like the early days of the internet when states were competing to become tech hubs. Now, let's get into the technical analysis because this is where things get really interesting for traders. Bitcoin's technical profile right now is presenting what I would call a compelling bullish case across multiple timeframes. We're trading above all major moving averages, which is always a good sign for trend followers. The RSI is sitting at 70.689. which is approaching overbought territory but still within bullish parameters. Here's the thing about RSI that a lot of people don't understand. Readings above 70 can persist during strong trending markets, especially when you have fundamental catalysts like institutional adoption and regulatory progress supporting the move. The MACD indicator at 306.2 is giving us a strong buy signal, with the MACD line maintaining position above the signal line and the histogram showing positive momentum. This configuration typically precedes continued upward price movement, particularly when it's confirmed by volume analysis and institutional flow data. The ADX reading of 39.419 confirms robust trend strength. Values above 25 indicate strong trending conditions, and readings above 35 suggest very strong trends. The current ADX level supports expectations for continued directional movement rather than sideways consolidation. Now here's where it gets a bit tricky. The stochastic indicators are presenting the primary caution signal with STOCH at 98.962 and STOCH RSI at 100, both indicating overbought conditions. But here's the key: these oscillators can remain elevated during strong trends, and their current readings should be interpreted as timing indicators rather than directional indicators. For support and resistance levels, we've got a well-defined trading range structure. Primary support is sitting at 105,800 to 105,900, with secondary support at 105,525 to 105,657. The critical support level that everyone should be watching is 104,800 to 104,900, $105,000, where we have major moving average confluence. On the resistance side, immediate resistance is at 106,081 to 106,213. with key resistance at 106,359 to 106,400. This 106,400 level is crucial because it's both a technical resistance level and a psychological resistance point. If we break above this level with volume, we could see a rapid move toward $107,000 to $107,500. The volume analysis is telling us a really interesting story. Bitcoin's on-balance volume continues trending upward despite the price consolidation, creating a bullish divergence that suggests hidden accumulation during this sideways price action. This pattern typically precedes significant upward price movements as accumulated positions eventually drive price discovery higher. Some analysts are predicting 130,000 to 135,000 Bitcoin during summer 2025. Based on these sustained accumulation patterns, the divergence between price and volume indicates that institutional buying pressure is building beneath current levels, providing fundamental support for higher prices. Here's something that should excite DeFi enthusiasts. Decentralized exchanges captured a record 18.7% share of total spot trading volume in May, with DEX volumes surging 95% to $475 billion. This represents a fundamental shift toward decentralized trading infrastructure, reducing reliance on centralized exchange liquidity and improving market resilience. Now, let's talk about social sentiment, because this is where things get really contrarian and exciting. Sentiment's social media analysis reveals what I would call a critical contrarian setup. We're seeing only 1.03 bullish comments for every bearish comment across social media platforms. Retail sentiment has reached extreme bearish levels not seen since the April 6th tariff reaction panic. This extreme bearishness among retail participants creates a powerful contrarian indicator. Markets historically move opposite to prevailing retail sentiment, and the current sentiment reading suggests that retail traders have largely capitulated or adopted defensive positions. This reduces selling pressure and creates perfect conditions for institutional accumulation to drive prices higher. It's like that old Warren Buffett quote about being greedy when others are fearful. Right now, retail is fearful, institutions are greedy, and smart money is accumulating. Matthew Hyland's X poll showed an even split between those expecting Bitcoin to reach new all-time highs above $114,000 versus those anticipating a drop to $94,000. But when you look at the institutional flow data and technical analysis, the $114,000 plus scenario carries much higher probability. Elon Musk's X platform evolution is another factor that most people are underestimating. The platform's planned integration of comprehensive financial services could drive mainstream crypto adoption among X's 600 million users. The X Money payment app, launching first in the US during 2025, positions the platform as a crypto-friendly financial ecosystem. When Musk talks about users being able to transact their whole life on the platform, that's not just marketing speak. That's a potential game changer for crypto adoption. So, what does all this mean for trading strategies over the next 7 days? Based on my analysis, I'm assigning a 65% probability to bullish scenarios targeting $108,000 to $109,000. The key resistance level to watch is $106,400. This is our critical breakout level. For the bullish scenario, entry triggers include a sustained break above $106,200 with volume confirmation. This would indicate institutional buying acceleration and momentum algorithm activation. Primary targets are $108,000 to $109,000, with secondary targets extending to $111,000 to $112,000. Risk management is crucial here. I'd recommend stop losses below $104,800, positioned beneath the key support cluster and major moving average confluence. This represents about 1.2% downside risk from current levels, giving us an attractive risk-reward ratio of approximately 3-to-1 for the primary target scenario. Position sizing recommendations, I'd suggest 60 to 70% of your normal crypto allocation for bullish positions. The strong institutional bid provides confidence in support levels, while regulatory progress offers fundamental backing for higher prices. Now, I'm not completely ignoring the bearish scenario, even though I only assign it a 25% probability. This would require a significant shift in market dynamics, likely triggered by unexpected regulatory setbacks or major geopolitical developments. Entry triggers would include a sustained break below $105,500 with volume confirmation. Bearish targets would be $103,000 to $104,000 for primary targets, with secondary targets at $101,000 to $102,000. Risk management for bearish positions would require stops above $107,500. There's also a neutral consolidation scenario, but I only give this a 10% probability given the strong institutional flows and technical momentum. This would involve range trading between $105,500 and $106,500. For altcoin exposure, Ethereum presents the most compelling risk-adjusted opportunity among major altcoins, given the network growth acceleration and regulatory tailwinds from stablecoin legislation. I'd recommend 20 to 30% of crypto allocation here, with focus on ETH-BTC ratio improvement. XRP offers tactical opportunities around ETF developments and regulatory clarity, but requires careful timing and risk management. I'd limit this to 5 to 10% of crypto allocation for tactical positioning. Solana faces near-term headwinds from governance issues and technical weakness relative to Bitcoin and Ethereum. The SOL ETH ratio declined to 0.0571, suggests continued underperformance, so I'd warrant reduced allocation until we see technical improvement. Let's talk about the key catalysts and risks for the next 7 days. On the upside, House passage of the Genius Bill represents the most significant near-term catalyst. This could trigger institutional FOMO and corporate adoption acceleration. The bill's bipartisan support and presidential endorsement suggest high probability of passage. Additional corporate Bitcoin treasury announcements, particularly from Fortune 500 companies, could trigger momentum acceleration. Sailors' continued accumulation and international engagement suggest additional corporate announcements may be forthcoming. Technical breakthrough above 106,400 resistance would likely trigger algorithmic buying and momentum acceleration, potentially driving prices toward our 108,000 to 109,000 targets within days rather than weeks. Continued ETF inflow acceleration, particularly if daily inflows exceed $500 million, would demonstrate institutional demand exceeding current supply and support higher price targets. On the downside, escalation of Middle East geopolitical tensions represents the primary external risk factor. However, Bitcoin's recent resilience during geopolitical stress suggests reduced correlation with traditional risk assets. Unexpected regulatory setbacks, particularly if the Genius Bill encounters House opposition, could trigger short-term selling pressure. But the bill's bipartisan support and presidential endorsement suggest low probability of significant setbacks. Major exchange security incidents or regulatory enforcement actions could trigger broader market selling, but the crypto market's maturation has reduced these risks significantly. Here's my bottom line assessment. The cryptocurrency market stands at a critical juncture where institutional adoption is accelerating while retail sentiment remains pessimistic. This creates optimal conditions for continued price appreciation over the next 7 days. The convergence of regulatory progress, institutional flows, and technical momentum provides multiple support vectors for higher prices. Bitcoin's position above $106,000 with strong institutional support suggests limited downside risk relative to upside potential. The 106,200 to 106,400 resistance zone serves as the key determinant of near-term direction, with breakthrough likely triggering momentum acceleration toward our 108,000 to 109,000 targets. The broader cryptocurrency ecosystem benefits from regulatory clarity and institutional adoption trends that extend beyond Bitcoin to encompass Ethereum, stablecoins, and enterprise blockchain applications. This ecosystem growth supports long-term value creation while providing tactical opportunities for informed traders. Risk management remains paramount despite my bullish conviction. Mechanical stops and position sizing discipline are essential for navigating inevitable volatility. The institutional support provides confidence in support levels, while regulatory progress offers fundamental backing for higher prices. The next 7 days will likely determine whether Bitcoin can establish a new trading range above $106,000 or requires additional consolidation before the next major upward move. The weight of evidence suggests the former scenario carries higher probability, supported by institutional flows, regulatory progress, and technical momentum that continue building beneath current price levels. For those of you looking for specific trading triggers over the next 24 hours, watch for volume confirmation on any move above $106,200. If we see sustained buying pressure with volume above the 20-day average, that's your signal that institutions are stepping up their accumulation. On the flip side, if we break below 105,500 with volume, that would be a warning sign that the bullish thesis might need reassessment. Remember, this analysis is based on comprehensive data synthesis from authoritative sources and established analytical frameworks. The institutional ETF flow data, regulatory developments, and technical indicators all point toward continued strength, while social sentiment provides contrarian confirmation of the bullish thesis. As always, this is not financial advice, and cryptocurrency investments carry significant risk, including the potential for total loss. Always do your own research and never invest more than you can afford to lose. But if you're going to be in this market, at least be informed about what's really happening beneath the surface. That's a wrap for today's deep dive into the crypto markets. If you found this analysis helpful, smash that like button, subscribe if you haven't already, and hit the notification bell so you don't miss any of our market updates. Drop a comment below and let me know what you think about these institutional flows and whether you agree with my bullish bias for the next 7 days. Until next time, this is Boni reminding you to stay informed, stay disciplined, and remember that in crypto, patience and proper risk management are your best friends. See you in the next one.